Welcome back. Yesterday was a strong start to the week. The benchmark indices closing at record highs for the second day in a row. Yesterday, Nifty Sensex ended up with a gain of 0.3%. The Nifty closing below 24,600. But this morning, the GIFT Nifty is suggesting a slightly positive start and could push the spot Nifty above 24,600. The PSU stocks were the stars in yesterday's trade, and mid-caps too continued with that record-breaking rally. But let's drill it down to the individual stocks. Our entire research team is standing by with CNBC-TV18's list of top stocks for the day. And first up, it's Vedanta. That's the big one to watch today. Sudarshan?
That's correct. So last week of our CNBC-TV18 news break is confirmed as per the term sheet that we have an access to. Vedanta has launched the QIP to raise up to nearly almost rupees 6,700 crore. And base size is a little more than rupees 5,000 crore. And with the green show option is almost rupees 1,700 crore. Indicative price is seen somewhere around 440 per share. If you consider yesterday's closing price, it's at a discount of little more than 4%. And at the base price, there will be a dilution of 3% equity. And if we consider the total size, it would be a dilution of 4%. So in the last 1 month, this will be the second time there will be a dilution in Vedanta. Last month, Vedanta's promoter had sold 2.6% equity via block this. And after this QIP, there will be a lock-in period for both company and promoters of 60 days. So keep an eye on Vedanta. The stock will be in focus today.
And congratulations, Sudarshan. You told us first here on CNBC TV18 itself. I think this is a big trigger because it'll keep the debt under check. And then the street moves ahead and, in fact, looks at, how the demerger pans out. But congratulations on that big story. Well, let's hop across to Abhishek. He's standing by to tell us about Jio Financial as well as Paytm. Morning, Abhishek.
Morning, Nigel. So, Jio Financial, other income has aided the top line growth this time around. If you take a look at the interest income, it's down 16.8% YOY and 35.8% sequentially. However, other income is up 25% YOY and about 104% sequentially. The OPEX has been controlled and that's down by 22% on a quarter-on-quarter basis. Operating profit hence is up nearly 7% on a sequential basis, while PAT is nearly flat on a sequential basis. Now, Paytm administrative warning letter from SEBI has come in for related party transactions entered by the company and its subsidiaries. So this was done in FY22. Company had claimed that the transaction do not qualify as related party transactions during FY22. However, the board and audit committee have considered as material related party transaction and passed a resolution that such transactions with PBPL will be within the limits. Now, violations have been viewed very seriously by SEBI, and they have warned Paytm to be careful in future and improve the compliance in Paytm. Back to you.
Right, Abhishek, thank you very much for that. Now, Angel One reported numbers, and Vamakshi is here to tell us how they look. Vamakshi, morning.
Well, good morning, Prashant. Let me first start off with the company's operating revenue. That stood at 1,405 crores. This is an uptick of almost 4% sequentially. And this growth is largely being led by interest income, which was up 19% on a sequential basis, and other income. Fee income, which contributes a major portion of the company's revenue, was, however, flat on a sequential basis. The negative this time around was the growth in operating expenses. This growth in operating expenses was much higher as compared to the top line growth. In fact, operating expense reflects 115 crores a portion for IPL expense. The employee expenses too were nearly 27% higher quarter on quarter, led by annual increments and variable pay. Resultantly, we're seeing a nearly 11% dip sequentially on the EBITDA. EBITDA now stands at 470 crores for the first quarter, and the margins have also contracted sharply, down nearly 560 basis points sequentially to 33.5%. Net profit is also seeing a downtick of nearly 14% sequentially. So overall, that doesn't look like a good set of numbers for Angel One, and my sense is the stock is expected to open lower today.
Okay, big 115 crore of IPL expenses could drag Angel One lower today. But let's get to more earnings. Mangalam joins in with Hatsun Agro. Mangalam.
Well, good numbers coming in from Hatsun Agro. You have around a 10.5% revenue growth that the company has reported. Remember, this was the summer season, extended summer as well, at a time where they're increasing their footprint in the ice cream business. So that's done well for them, and that's reflected in their gross margins as well. So 10.5% revenue growth has actually led to a 39% jump in their EBITDA, which has increased from about 11% to 14% on the margins. And as a result of which, there was a sharp 62% jump in the net profit as well. 80 crores have turned into 130 crores. And gross margins, like I said, in the dairy business, the cycle is turning. So most companies will report quarter-on-quarter gross margin decline. But here, both quarter-on-quarter and year-on-year gross margins for Hatsun Agro have increased. So see green on the stock.
Okay, thanks for that, Mangalam. Good set of numbers coming in there on Hatsun Agro. But let's get our daily dose of pharma. Ekta joins in to tell us about some of those pharma stocks that are in the news. Ekta?
Thanks for that. Well, I'll start with Lupin, which I expect the stock to be in the green today because they've divested their US commercial women's health specialty business to EvoFem, which is a biopharma company focused on women's health. Now, basically, this women's health portfolio contains one of their key brands called Solosec, which they had launched a couple of years ago. It's a single dose drug, which is basically used to treat two sexually transmitted diseases. And it was expected to have a lot of potential, but I think the ramp up was slower than anticipated. But from this deal, Lupin can receive a potential of up to $84 million based on future contingent milestones. The aim is to build a few therapeutic areas in the US which have synergy, such as respiratory as well as neurological. So that stock will be in focus on account of that. Unichem is in focus along with Ipca because Ipca bought Unichem because Unichem's Goa plant has been issued 5 observations. The observations, they say, are procedural, no data integrity.
All right, Ekta, thank you very much for that. Well, let's talk about real estate as a space. Century Textiles should be in focus. There is also Pearl Global, which we want to highlight. Sonal has got both those on our radar. Sonal, morning.
Good morning, Prashant. Let me start with Century Textiles. Birla Estates, which is an arm of the company, has secured prime land of 71 acres. This is in Sector 71 of Gurugram, which is a prime area. The gross development value here is 1,400 crore rupees. The development potential is of around 1 million square feet. The second stock on our radar is Pearl Global. They will be raising funds via QIP. They have approved the floor price of the issue at around 748.68 rupees per share. Additionally, there is a block deal here in the stock as well. HDFC Mutual Fund bought 6.8 lakh shares, which is 2% of the equity via block deal yesterday. This is something that Nimesh had highlighted on the Street Charter yesterday as well.
Okay, thank you very much for that. Pearl Global ending with a gain of 3.5%. A quick recap then of the top stocks with positive news flow are Vedanta on the back of that QIP, Geo Financial Services, Hatsun Agro, Lupin, Century Textiles and Pearl Global. While stocks with negative news flow are Paytm, Angel One, Unichem Laboratories and Ipca Laboratories. We also have Vodafone Idea, which should be on your radar, but we'll get to that in just a bit. Before that, it's over to Manisha for all a roundup of the commodity action from overnight. Manisha.
Thank you so much for that. I'll start with the crude oil prices, where we have seen some pressure come into the markets, and this is because of the slowing Chinese demand. The crude imports into the country have been weaker, and we've seen the GDP numbers and the employment, retail sales, all of that data come in on the weaker side here. But the markets have kind of reacted to the U.S. Fed Powell testimony, saying that they will not wait for the inflation rate to hit 2%, and that really has increased the probability of an interest rate cut coming in for the month of September. It has given a lot of surge for the precious metal prices overnight, where gold is now very close to its all-time highs. We have seen last 3 weeks of gains come in for gold, and further gains is what we are looking at this point in time as well. Well, it also has to do with the China plenum meeting. Well, that is underway, and expectations of further stimulus measures and policies for the next 5 years from China is what is the market's waiting for as well, and that in turn seems to be supporting the metal prices also. So it really is about metals in Asia right now, which are trading quite in the positive.
Thank you very much for that. And now